If you thought the markets would ease up after last week's roller coaster, think again. Between a red-hot inflation print and the UK dovish signals from the Fed, and rising geopolitical tensions, April 23rd threw a lot on traders' plates, and tomorrow's setup is shaping up to be just as crucial. Let's break it down. Fed's Bostic hints at policy patience. Atlanta Fed President Raphael Bostic poured cold water on immediate rate cut hopes, noting that while inflation is trending in the right direction, it's still too sticky for comfort. His comments kept the US dollar somewhat supported, especially against the euro and yen. 2. UK inflation jumps more than expected. The big headline came out of London. UK CPI rose 4.6% year-over-year in March, well above the 4.2% consensus. That triggered a sharp GBP rally mid-morning, pushing the pound back toward recent highs as traders reassessed the odds of a Bank of England rate cut this summer. 3. Japan's trade deficit widens, yen under pressure. Japan's March trade deficit came in at 1.1 trillion yen, worse than expected. Exports dipped, imports rose, and with US yields still relatively elevated, US dollar to Japanese yen kept marching higher, eyeing the 156 handle. Don't rule out the BOJ stepping in if the yen weakens much further. 4. Geopolitics still simmering. Middle East tensions and soft Chinese growth data added a risk-off flavor early in the session, but markets quickly refocused on central bank narratives as the dominant driver. Euro to US dollar, stuck in the fog. Last price, 1.0660. Support, 1.0630/1.0600. Resistance, 1.0705/1.0740. The euro has been stuck in a tight range, capped by 1.0705 and unable to reclaim momentum. Today's mild US dollar strength, paired with weak German consumer confidence data, dragged the pair lower. RSI is neutral near 47, suggesting neither bulls nor bears are in full control. Outlook: if 1.0630 breaks, we could see a quick drop to 1.0600. Upside remains limited unless we get a catalyst from Eurozone flash PMIs tomorrow. Pound sterling to US dollar, the inflation bounce. Last price, 1.2555. Support, 1.2510/1.2450. Resistance, 1.2590/1.2640. Sterling surged on hotter-than-expected inflation, breaking cleanly above 1.2500 resistance. Short-term momentum looks strong, but RSI is approaching overbought territory at 69. Traders should watch for a rejection near the 1.2590 zone. That's been a stubborn ceiling in April. Outlook: if the pair holds above 1.2510, the bulls remain in charge. Keep an eye on UK retail sales Friday for follow-through. US dollar to Japanese yen, relentless climb, but intervention risk rises. Last price, 155.85. Support, 155.20/154.60. Resistance, 156.10/157.00. Dollar-yen is grinding higher on diverging monetary policy paths. The US remains hawkish-ish, while the BOJ continues to hold rates at rock bottom. However, with the pair flirting with levels last seen before October's currency intervention, the Ministry of Finance may not stay silent for long. Outlook: keep positions tight above 156.00, the risk of a verbal intervention is real. Friday's Tokyo CPI could be a game-changer. Forecasts for the next trading day, April 24, 2025. 1. Eurozone PMIs, prelim. Flash PMIs out of Germany and France will be in focus early. Weak numbers could push euro to US dollar toward 1.0600, while any upside surprise might be the fuel bulls need to test 1.0740. 2. U.S. jobless claims. Weekly jobless claims have stayed elevated the past few weeks. A soft number could revive talk of a Fed pivot, weakening the dollar short term. 3. Fed speakers galore. We've got a full lineup tomorrow: Powell, Daly, and bar are all on deck. Any whiff of dovishness could give risk assets a leg up and push USD lower across the board. Trader tips: what to watch and how to trade it. Don't chase the pound. Today's CPI reaction was big, maybe too big. If you missed the move, wait for a retrace to 1.2510. Chasing breakouts in overbought conditions often ends in frustration. Watch for wicks near US dollar to Japanese yen 156.00 plus. If the pair spikes above 156 and then immediately retraces, that could signal official intervention or a big seller stepping in. Trade with tight stops or step aside. Set calendar alerts. With so many data points tomorrow, it's worth setting alerts 10 to 15 minutes ahead of key releases. Volatility will spike, especially around Eurozone PMIs and Powell's remarks. Stick to the trend but respect support/resistance. In choppy macro environments like this, following the broader trend works, but only if you respect key technical zones. Breakouts are rare lately. Range trading has been more reliable. Final thoughts. April 23rd delivered fresh catalysts across the board, and April 24th promises more of the same. Whether you're a short-term scalper or a swing trader, there's no shortage of opportunity, as long as you manage risk smartly and stay alert to news flow. Stay nimble, stay focused, and don't force trades.